When it comes to investing and even life, no one is perfect. But the best thing is this: learn from your mistakes and even learn from your wins. It can help you to become a better investor and even a better person. But get this: this here is the world's biggest hack, at least in my view. Learning from the mistakes of others is even better, because let them lose the money, okay? Let them go out, fall on their face, and you sit back and take notes. And in this video, I am going to share with you my first quarter investments and what I've lost money on and what I have made money on. And you can take whatever notes and observations you need to from that. Let's go ahead and break it down. Now, I'm doing this on April 1st. By the time that you see it, it is at some point the first week of April, okay? The video comes out when it comes out, in whatever order it comes out, because it might be a crazy week. We'll see. All right, so I'm pulling these numbers from Public, and I want to give you some context on these numbers, okay? That's why I gave you the date first. At the time we're doing this, the stock market year to date is down 4.5%. My portfolio as a whole is down 4.45%. Okay. Now, let me repeat that in case I messed it up, because I wrote my numbers down. Okay. The stock market as a whole, the S&P 500 is down 4.5%. My portfolio is down 4.45%. So I'm barely beating the stock market, if that matters. Okay. I'm down, but I'm not as down as the S&P 500. Yay. But there are some gems here. All right, so I'm just going to go in order from how it was listed in my portfolio. I've got some wins and I got some losses. So let's set the stage here. Now, the time that you're watching this could be different, but I'm recording this on April 1st. I want to say that because the stock market might be crazy by the time that you are seeing this, but it's the end of the quarter and the start of a new quarter. So I want to, cut it straight and just take a look at it before, things change. All right. So I'm taking all these from Public, and year to date, the time I'm doing this, again, the stock market is down 4.5%. My portfolio is down 4.45%. So I am technically beating the stock market, though as a whole, my portfolio is losing money. Okay, I'm also going to tell you some things and observations that I'm making from this portfolio. I ain't making no changes right now. We'll talk about why that's the case and what I plan to do later. Okay, what you decide to do is on you. Okay, this is my investments. All right, and again, you learn from my mistakes. All right, if you consider these to be mistakes. Anyway, all right. Costco, I am up 3.3%. All of these are year to date as well, not my all-time gains. I don't really think that's fair, right? Because if I've been holding the stock for several years, what difference does it make what's happened year to date? Okay, it's kind of not fair. All right, so Costco, year to date, stock I own. All these are stocks that I own. Again, you can see them on Public. But right now, 3.30%, 3.3%. Yay, that's good. Stock we've talked about before. O'Reilly's, up 20%. I be telling y'all, okay? That's a win. It's not going to be all sunshine and rainbows. But O'Reilly's is a stock I have been talking about. There's a reason as to why. Maybe we're going to go into a rough patch the rest of the year. I don't know. I'm not going to go into further detail. We have videos covering those. If you want to see those videos, you can check that out right here. All right, Netflix is not, so far this year, not doing what I wanted it to do, which is to be up like O'Reilly's, up 20%. But it's up 2.6%. And honestly, being up 2%, being up 3%, like Costco, it's better than being down 4 or 5%, so I honestly shouldn't be complaining. That is very good compared to the alternative, which is being down 5%. So hooray for Netflix, hooray for Costco, giant hooray for O'Reilly's. And then here's where things start to slide. Apple down 11% so far this year. Warren Buffett was right. All right. Now, in my videos about Warren Buffett, I didn't say he was wrong. I said don't panic. And I'm still not panicking about Apple. I have been less excited about Apple. I've been pretty consistent on that. I haven't really sold my Apple shares. We gonna see what happens here in June, because they really haven't done a whole bunch to excite me. And I feel like this has been a consistent slide down. I will reevaluate that in June. What I'm not going to do is, as the stock is down 11%, take a look at it and then out of emotion make a decision. Like, it doesn't make sense. It's already down. I'm not in a good mood, obviously, right, and then make a decision. Clearly my decision is not going to be out of a good place. I'm gonna wait until June, which is what I always do. Then we'll take a look and see whether or not it makes sense for me to continue holding Apple. Just because it's a good brand name doesn't mean it's going to be a great stock for forever. Okay, we'll see. All right, Palo Alto Networks, which is a stock that Nancy Pelosi had traded earlier. You want to see what she was buying and selling, you can check out that video here. That one year to date is down 6%. A little surprising to me. We can look into that one. I don't think I've held that one for too long. FICO is a stock I've held for a very long time, but year to date it is down 6%. For me, I'm not overly worried about it. I would need to see what my long-term gains are here. I'm not going to look into it. I'm staying out of it. I don't want to make emotional decisions. I don't want to overreact. Okay? I practice what I preach. Now, again, for this video, I just went, check year to date, and stayed up out of there. Okay? But year to date, I'm down 6%. I've had FICO for at least 2 years, at least, at bare minimum. But again, I really want to take a hard look at my portfolio in June. So we'll see at that point where things are and whether I feel like FICO is still a good buy, which I feel like it should still be. It still should be. I'm at like an 80% that still is. Microsoft down 9%. Strange to me. Again, this is me reacting to my own portfolio. I don't see anything as to why Microsoft should be down. Microsoft feels, okay, this is before doing research. These are my own investments. So, and also context here. Context is important. I already own them. I've done research on these. I've had this for years. So to me, Microsoft as a whole, for me, because I've had it for, especially in public, I've had it for well over 5 years at this point. So I'm holding on to Microsoft at this point. Here's where things get real interesting though. KKR is a financial stock. I was really strong on it last year. You guys know how I was very big into finance stocks this year. This was, up until like February, one of the better finance stocks. It is down 21%. What happened here? I don't know. I am upset. I am hurt. Learn from this mistake. Learn from it, okay? Maybe it can recover, but I'm going to tell you right now, if it don't improve by June, it is the first thing I'm kicking out of my portfolio. I don't know what happened. I don't, okay? I think, without taking a hard look, I'm pretty sure I've had it for at least a year. Okay, I hope I have, because if I lost money on it as a whole, it's a tax loss anyway. But that to me is wild. I don't understand. Whew. Again, I'm not perfect. Learn from these mistakes. Google is down 16%. Alphabet, you want to be technical, it is what it is. They're not doing anything that's truly exciting me, but whatever. Palantir up 10%. A stock that I can be more excited about. Yay for them. Talked about Palantir. I don't think I need to go too much into detail there. Now, here's one that I am a lot more excited about, and at least I get to end on a good note, is Honeywell, HWM. This one's up 19%. Hooray! When I told you guys about defensive stocks and why I did like that company. Now, what is the learning that we can talk about here? This is one of the reasons as to why I'm sticking to my theory, right? And my process. Really, I would say my process more than my theory, right? I adjust my portfolio, and I'm just small tweaks, small things to my portfolio every 6 months because it gives me a recent indicator or a recent feel on what is going on with the market. Because if you notice, the most recent additions and tweaks, Netflix, Costco, Honeywell, Palantir, I just recently added, everything with the exception of KKR is doing pretty good compared to where the stock market is. So when I see, hey, we might have tariffs. Hey, we might have more inflation. So let me add something that I feel like is tariff neutral, like Netflix. Let me add something that can adjust with tariffs, like Costco. Let me add something that I think is going to do well based on what I think the administration is going to do or not do, like Honeywell. These are the things that are going to help. If I did nothing, I probably would have had too many tech stocks. And I don't remember the stocks I had before off the top of my head that I would have lost 21% like KKR, or stuck with something like Netflix, like Microsoft, and continue to lose 9%, or things could have been much worse. So come June, and we've perhaps had tariffs for, at that point, 4 months, I can adjust a bit more. Maybe I need to invest more in some of those stocks, or newer stocks will emerge at that point in time. So again, I'm not panicking at this point. Panic is just not a part of the plan, like I always say. But these are some adjustments that I'm just thinking out loud, and what is actually happening in my portfolio. Okay, so I'm down 2. All right, I had lost money too at this point, but there are some bright spots in my portfolio, and these are the things that I made adjustments back in December of 2024, when I told y'all what may happen. Okay, not what will happen, what may happen. The same stuff we talked about in our 2025 workshop, the same stuff we've been talking about in these videos. I told y'all about Homewell. I told y'all about Netflix. We talked a little bit about Costco. All right, I wasn't perfect on every single thing, but we talked about some of these risks and some of the things that I made moves on. This is why. O'Reilly's I've had for a very long time. A lot of these I've had for a long time. So again, the returns long term are likely going to be very, very different, but we're just looking at what happened so far in 2025. So if you want me to continue doing, short, quick videos like this and just reactionary videos as opposed to deep research, you guys let me know. But I just wanted to, kind of give you my realistic reaction, no real script or anything. I actually never have a script. Newsflash for you guys. But let me know what you think. But if you want other ideas as to what is going on in the market right now and other things that you may want to consider investing in, then check out these videos right here.